Car repossessions in America just hit the highest level since the 2009 financial crisis. 1.73 million vehicles were repossessed in 2024, and 2026 is shaping up to be even worse. Subprime loan delinquencies are at the highest level since records began in 1993. This isn't just a statistic, this is a crisis affecting millions of Americans. What's up everyone, welcome back to Gearhead Garage. Today we're diving into something that doesn't get enough attention, the massive surge in car repossessions happening right now. I'm going to show you the shocking data, explain exactly why this is happening, reveal who's at risk, and most importantly teach you how to avoid losing your car and show you how to buy repossessed vehicles at massive discounts if you're in the market. Let me hit you with numbers that should terrify anyone with a car loan. Subprime auto loan delinquencies loans that are 60 or more days past due are at 6.65%. That's the highest level since the Federal Reserve started tracking this data in 1993. Higher than the 2009 financial crisis, higher than the .com crash. This is uncharted territory. In 2024 alone, 1.73 million vehicles were repossessed. That's the most since 2009. And here's what nobody's talking about, 2026 is on track to be worse. The loans that were written in 2021 to 2023 during the pandemic, when car prices were insane and lending standards were loose, are now defaulting in massive numbers. But it's not just subprime borrowers anymore. Even superprime borrowers, people with excellent credit scores above 720, are showing stress. Severe delinquencies among superprime borrowers are up 300% year-over-year. When people with good credit start defaulting, that tells you the economy is in trouble. And here's a stat that explains a lot. 28% of tradings are underwater, meaning people owe more on their car than it's worth. The average amount underwater is $6,905. Think about that. More than a quarter of people trading in cars are bringing $7,000 in negative equity to their next purchase, which immediately puts them at risk for their new loan. Overall delinquencies are up 50% since 2010. Average monthly car payment is now $761. Average new car price is over $50,000, up 35% since 2019. People are drowning in car debt, and repossessions are the inevitable result. So why is this happening? There are 5 interconnected reasons creating this perfect storm. Reason number 1. Cars are too damn expensive. The average new car costs over $50,000. The average used car is around $28,000. These prices are completely disconnected from what average Americans can afford. During the pandemic, prices skyrocketed and never came back down. People who bought in 2021 to 2023 overpaid by $5,000 to $15,000, and now they're stuck with loans they can't afford on cars worth less than they owe. Reason number 2. Interest rates doubled or tripled. In 2020 to 2021, car loans were 2-4. Now, average is 6.6% for good credit. If you have fair or poor credit, you're looking at 10-18 or even higher. A $30,000 car at 14% interest over 72 months costs $686 per month. That same car at 3% would be $456. The interest rate alone is adding $230 to monthly payments, pricing people out. Reason number 3. Loan terms are insanely long. To make monthly payments affordable, lenders stretched loans to 72, 84, even 96 months. That's 8 years to pay off a car. The problem? Cars depreciate faster than people pay them off, so they're underwater for years. When life circumstances change, job loss, medical bills, divorce, they can't sell the car to get out from under the loan. They're trapped. Reason number 4. Economic pressure is crushing people. Inflation has destroyed purchasing power. Rent is up, food is up, healthcare is up, utilities are up, gas is expensive. When you're struggling to pay for groceries, the $761 car payment becomes impossible. People are making brutal choices. Pay the car note or feed their kids. The car loses. Reason number 5. Predatory lending during the pandemic. From 2020 to 2023, lenders approved everyone. People with 550 credit scores were getting $40,000 loans at 18% interest. Dealers didn't care because they made huge commissions. Lenders didn't care because they could bundle and sell the loans as securities. Now those loans are defaulting, and the borrowers are getting their cars repossessed. Here's the brutal truth. The car loan industry created this crisis by approving people who had no business taking on $700 plus monthly payments. Now, millions of people are paying the price. Let's talk about who's actually at risk of repossession. If any of these apply to you, you need to pay attention. You're at risk if you have subprime credit. If your credit score is below 620 and you took out a car loan in the last 3 years, you're in the danger zone. Subprime borrowers default at 3 to 5 times the rate of prime borrowers. If you're already 30 days late, there's a 40% chance you'll be 90 plus days late within 6 months. You're at risk if you have a loan over 72 months. The longer the loan, the higher the default rate. 84-month loans default 60% more often than 60-month loans. Why? Because you're still making payments when the car needs major repairs, and you can't trade it in because you're so far underwater. You're at risk if your car payment is over 15% of your gross income. Financial experts say you should spend no more than 10 minus 15 of gross income on car payments. If you make $50,000 a year and your car payment is $700, that's 16.8% of your gross income to high. When unexpected expenses hit, you won't have room in your budget. You're at risk if you bought during 2021 to 2023. These were the peak overpayment years. If you bought a car during this period, especially if you rolled negative equity from a previous car into the loan, you're at elevated risk. You pay too much, you probably have a high interest rate, and your car has depreciated more than you've paid down the loan. You're at risk if you have job instability. If your income is inconsistent, seasonal, or at risk of layoff, any disruption will put you behind on payments. One missed payment becomes 2, becomes 3, and suddenly you're getting repo letters. If even 2 of these apply to you, you need to take action now before it's too late. Alright, so you're at risk. What do you do? Here are your options, ranked from best to worst. Option number 1. Contact your lender immediately. The moment you think you can't make a payment, call your lender. Don't wait until you're 60 days behind. Many lenders have hardship programs that can defer payments for 1-3 months lower. Your interest rate temporarily extend your loan term to allow monthly payments, skip a payment, and add it to the end of the loan. Not all lenders offer this, but some do. It costs you nothing to ask. Be honest about your situation. If you lost your job, tell them. If you have medical bills, explain that. Lenders would rather work with you than repossess your car. Repos cost them money too. Option number 2. Sell the car privately fast. If you can sell the car for more than you owe, do it now before you fall further behind. Private party sales get you more money than trade-ins. List it on Facebook Marketplace, Craigslist, AutoTrader, everywhere. Price it aggressively to sell fast. Even if you break even, you're out from under the payment. Option number 3. Negotiate a voluntary repossession. If you know you can't keep the car, don't force the lender to hunt you down with a tow truck. Call them and offer voluntary surrender. This can reduce the fees and may result in a less damaging credit report entry. It's still bad for your credit, but not as bad as forced repossession. Option number 4. Refinance the loan. If you still have decent credit and the car isn't too far underwater, try refinancing. Sites like MyAtolo and LendingTree or your local credit union might offer better rates. Even dropping from 12% to 8% can save you $100 plus per month. But this only works if you haven't missed payments yet. Once you're delinquent, nobody will refinance you. Option number 5. Trade down to a cheaper car. If you're underwater but not too deep, trade your $40,000 car for a $15,000 car. Yes, you'll roll negative equity, but your payment will still be lower. A $15,000 car with $5,000 negative equity financed at $20,000 will have a lower payment than your current $40,000 loan. It's not ideal, but it might save you from repossession. Option number 6. Consider bankruptcy last resort. If you're drowning in debt across the board, credit cards, medical bills, car loan, mortgage, bankruptcy might be your only option. Chapter 13 bankruptcy can let you keep your car and catch up on payments over time. This is a nuclear option that destroys your credit for years, but it's better than losing everything. Talk to a bankruptcy attorney before making this decision. What not to do. Don't hide the car. Lenders will find it, and hiding it can get you charged with fraud in some states. Don't ignore the lender's calls. Ignoring the problem makes it worse. Don't assume you have time. Repossession can happen with as little as 1 missed payment depending on your contract. Don't drive the car into the ground and hand back a broken vehicle. You will still owe the deficiency balance. Okay, Now let's flip this and talk about the opportunity. If 1.73 million cars were repossessed last year, where do they all go? Auctions. And right now, those auctions are flooded with inventory, which means insane deals for smart buyers. Where to find repo auctions? The biggest public repo auction platforms are Copart.com, over 400,000 vehicles. 4 million transactions per year, aggressively direct access. No dealer license needed. Scott Auction Salvage bid huge repo selection bindrive and auto for export bank-owned vehicles. Repossessed specializes in repo sales. 40 plus years in business avatar bid regional repo auctions. How repo auctions work. Step 1. Register on the platform. You'll need a driver's license and sometimes a refundable deposit 10500 to activate bidding. Step 2. Browse inventory. Use filters to find repossessed cars, not salvage or flood damage. Stick to clean title repos. You'll see photos of the vehicle. Legitimate description. Repos can have minor damage from towing, title status, location. Step 3. Do your research. Pull the van and run a Carfax or auto check. Look for service history, accident history, and verify it's actually a repo and not a salvage rebuild. Step 4. Inspect if possible. Some auctions allow in-person inspection or offer inspection services. Pay for this if you can. It's worth the $150 to know what you're buying. Step 5. Set your max bid and stick to it. Research the car's retail value on KBB or Edmunds. Repos should sell for 20-40 below retail. Set your max bid at 60-70 of retail value and don't go over. Step 6. Bid strategically. Don't bid early, you'll drive up the price. Wait until the last minutes. If it's an online timed auction, place your bid in the final 60 seconds. If it's a live auction, wait for bidding to slow before jumping in. Step 7. Win, pay, and pick up. If you win, you'll usually have 3-7 days to pay in full, cashier's check, wire transfer, or financing if the platform offers it. Then you arrange transport or pickup. What kind of deals can you get? Real examples from January 2026 repo auctions. 2019 Honda Civic with 168,000 miles, sold for $4,800, retail value 8. 502015 BMW 535i with 196,000 miles, sold for $3,200, retail value 7. 00212 Chevy Malibu with 179,000 miles, sold for $625, retail value 3. 502019 Maserati Levant with 52,000 miles, current bid $8,500, retail value 35. 00 plus 2024 VinFast VF9 Electron Volts with 2,786 miles, current bid $1,600. Buy it now $18,825, MSRP was $70,000 plus. These are 30-70 discounts. The catch is high mileage on some, unknown maintenance history, and you're buying as is with no warranty. What to watch out for? Repos are sold as is with no warranty. What you see is what you get. Some repos have been neglected. Owners who can't afford payments also can't afford oil changes or maintenance. Interior damage is common. Check photos carefully for torn seats, broken trim, smoking damage. Repos can have incomplete paperwork. Make sure the title is clear and transferable. Budget for repairs. Even if you get a $10,000 car for $6,000, you might need $1,500 in immediate repairs. If you're buying at repo auctions, follow these rules to avoid getting a lemon. Rule number 1. Always run a vehicle history report. Use the van to pull Carfax or auto check. Look for accident history, service records if available, title status, avoid salvage, rebuilt, or flood titles. Number of owners. Repo notation confirms it's actually a repo and not stolen. Rule number 2. Get an inspection when possible. Some auction sites offer inspection services for $100-$200. Pay for it. They'll tell you about mechanical issues, frame damage, and hidden problems that photos won't show. Rule number 3. Budget for repairs. Never spend your entire budget on the auction. If you have $10,000 to spend, bid no more than 7,508. So you have 2,00250 left for immediate repairs, registration, and unexpected issues. Rule number 4. Know the market value. Use KBB, Edmunds, or NADA to find the car's retail value. Subtract 20-30 for private party value. Then subtract another 20-30 for auction as is value. That's your target bid. If bidding goes higher, let it go. Rule number 5. Check for outstanding loans or liens. Sometimes repos still have balance owed or other liens. The auction should provide a clear title, but verify before you bid. If the title says lien holder, find out who and confirm the lien will be released with the sale. Rule number 6. Stick to popular, reliable models. Repos are risky enough, don't make it worse by buying an unreliable car. Target Honda, Toyota, Mazda, or mainstream domestic brands. Avoid European luxury repos BMW, Audi, Range Rover unless you're a mechanic or have a huge repair budget. Rule number 7. Factor in all costs. Auction fees, buyer's premiums, transport fees, registration, taxes, add it all up. A $5,000 repo car might cost $6,500 after fees and transport. Make sure the total is still a good deal.
All right, let's wrap this up. Car repossessions are at a 15-year high. 6.65% of subprime loans are seriously delinquent. 1.73 million cars were repossessed in 2024. People with $700 plus monthly payments and negative equity are getting crushed. This is a crisis for millions of Americans.
If you're at risk of repossession, act now. Call your lender and ask about hardship programs to sell the car privately before you fall further behind. Consider refinancing if you still have decent credit and ignore the problem. It gets worse, not better. If you're a buyer, this is your moment. Repo auctions are flooded with inventory. You can get 30-50 discounts on decent cars if you're smart and patient. Use Copart, Ride Safely, SCA Auction, and other platforms. Do your research, get inspections, budget for repairs, and don't overbid. If this video helped you understand what's happening or gave you a strategy to protect yourself, hit that like button. Subscribe because I'm going to keep covering the car market and giving you real actionable information. Drop a comment. Are you worried about your car loan? Or are you looking to buy a repo? Let me know. I'll see you in the next one.